Stock market today analysis for October 21st, 2022. The Nasdaq up 2.31%. S&P 500 up 2.37%. U.S. Treasury 10-year yield down 0.6 basis points. Gold up 1.41%. Bitcoin up 1.02%. The yen down 1.68%. Oil up 0.66%. Still in earnings season. These are the stocks that reported today. You can get a quick look. Besides on this one, line chart's not showing up, but you can that one either. Okay, so most of them you can get a quick look at what happened by seeing that line chart. Moving into next week, we're going into a lot of the big technology names, so that will be exciting to see. The fear meter, the volatility index. Look at that. Bam, came down again today. Down a little under 1%. Now, while the fear meter is going down, the risk indicator is still going up. And it would be a valid question to say, hey, Brent, what do you mean going up? Yesterday it closed at 296. Today it closed at 292. And you would be right. Although sometime throughout the day, this fear meter spiked into the extreme territory. And again, I would offer you this picture. When this indicator first came out, maybe close to 2 years ago, it was down here in green. And we are inching our way up. So as it moves to the extreme level of risk, it's moving like this. It's going up, it's pulling back. It's going up, it's pulling back. It's going up, it's going up, some dipping down a little bit, it's pulling back. It's going up, it's pulling back. But as you can see, we are closer to 300. We are closer to extreme risk than we are to just high risk. But nonetheless, right? Really listen to what we're saying. We're closer to high risk, or excuse me, we're closer to extreme risk than just, normal high risk. That's not necessarily normal, right? Maybe moderate. That should be normal. I don't know. But the VIX is coming down, right here at the moment. I'm actually in a class right now, an options trading class that I have the potential to learn a lot more of how the VIX is calculated, and as I go through this course and learn more about it, perhaps that will give myself, and then I can pass on to you, some data to make sense of why we're getting an elevated amount of risk up here, but it's not really correlating with over here. So some speculating stuff that we could do is that two speculations. One of them being kind of a drop almost across the board in treasury yields. So sort of rule of thumb that when the treasury yields go up, stock market tends to go down. So if these are going down, maybe the stock market can shoot up. Also, we're going through earnings season, and since I first started learning how to trade, actually when I really first started kind of getting a little more educated on earnings season was 2012-ish. So I first started learning how to trade in 2007, and then around 2012 I started getting a better understanding of not just what earnings reports are, but earnings reports tend to tend to be something like this. Let's pretend that you are you're my parents, and my report card is coming up, and I say, I know that my report card is going to be a B, but I tell you, yeah, I think I'm getting a C plus. And then when you see a B, oh, you're super happy. You're super happy. So what do? You get all excited. So that's from a very layman's understanding what tends to happen with a lot of companies and their earnings. So this idea of they beat their earnings. So the idea is they kind of lowball their earnings, so that way they beat them on purpose. So that can help push up the market. And if we were to do some research, which, to be honest with you, I'm not going to do the research just to validate a point to you, because I already believe it to be happening and I kind of trade with it. But if you want to do the research to prove it to yourself, feel free. You could go back. You could use Yahoo Finance and look at, like, pick one stock, maybe pick the S&P 500, and research, go through the max timeline here and research exactly which dates were earnings reports, and see how the S&P 500 reacted during those earnings seasons. And then maybe take a handful of stocks, like stock that's been around for a long time, like let's say Johnson & Johnson. Maybe a newer stock like Facebook. Grab a couple different stocks and look at what tends to happen at a bigger, broad spectrum, right? If you're looking at, it's one reason why you want to look at the S&P 500, because you're looking at like 500 different companies. If you're just going to kind of cherry pick, then there's probably, maybe there's, I don't know how many, but hundreds, maybe thousands of companies that are publicly listed. So if you're just doing 2 or 3, is that really an accurate data size? And I'll tell you what, that's one reason why I'm not doing it, because I just see it play out. So that could be another thing that's going on, that's causing the VIX to go down a little bit, possibly. Another thing, there's more talk of some sort of government quasi-agency goosing of the stock market to get the effects of something like quantitative easing, but they probably won't call it quantitative easing, and they'll say it's not quantitative easing because it's different this how, and sometimes it's sort of like just semantics on words. Like, let's say my girlfriend beats me, and I tell her mom, oh, your daughter, she punches me in the face. And her mom talks to her and says, you can't punch Brent in the face anymore. And she says, okay. So instead of punching me in the face, she starts kicking me. And she goes around, hey, you know what? I don't punch Brent anymore. I haven't punched Brent in a month. Well, she doesn't say. She kicks me instead, right? So she's getting the same result. She still gets to beat me. And, then she can, stand in front of a court of law and say that she doesn't punch me. So sometimes it seems a little semantics like that, and they're able to really sneak these semantics past people because most people don't really understand the terminology and the the underlying factors that are going on with it. And you don't necessarily have to know the terminology and the underlying factors that go on with it, but in essence, you just kind of need to know that if they're going to do some sort of gobbledygook, whatever they want to call it, it's possible to get one of these, That's how this stuff was happening, especially right here. That is not from straight company earnings. That's from basically spiking the punch bowl. Everybody's having a good time at this party. Yeah, because they're high on alcohol. If they weren't high on alcohol, maybe they wouldn't seem to be having so much fun. Once people are sober, then you can tell how much fun they really are, once you start getting them high, then it's like you're not dealing with just that straight person anymore. They're goosed or whatnot. So there's talk that something is going to happen, that the Fed is going to stop raising the rates as much or whatever. I don't know as much of the details. I'll tell you what, there's tons of videos on YouTube. I watch them, but I don't necessarily want to rehash a bunch of stuff like that. And why is that? Mainly because it's it's actionable, but I'm more focused on how can I make money with this stuff, and that's pretty much it. And then making these videos, I want to be able to give some value to people, but at the same time help myself make more money, get more clarity on what's going on. And talking about a lot of news articles and things like that, I don't know, it's not so much for me. So you can check out those other people that are doing it and what's for me, and let's try to, I'll do my best to make this a little more implementable action taking for you. So here is the S&P 500. Now, yesterday I talked about if we keep seeing this type of action, then we're not going to see the S&P testing this upside of this channel. Now, if we see this sort of action, we're gonna see that. We're gonna see that. If we keep seeing movement like this, we're gonna see it. Look at that. Boom. Look at that volume come in. Right? Oh, buying volume over significantly more than the volume that we've seen like this the rest of this week. Over its average daily volume. We got our weekly stochastic, right? This is a lagging indicator, but it's lagging in a slower time frame, giving us a potential indication of a bigger trend coming. And it could see how it can stay below that red line there. So it can stay below that, but let's at minimum take notice that it's crossed over just a tad bit. Right? Look at that. Crossed over just a tad bit. Now, it's not something to go buy a farm or sell a farm over, but at the same time, it's worth noting. So it's the overall 15-minute chart. Went up, sold off, and then after that pretty much went up. Closed above that 25-day moving average. Now, into next week, if the tech stocks are doing good reports, we could potentially, I think it's very likely, we could see the S&P 500 up here testing the 50-day moving average. And technology stocks. Bam, look at that. Real similar. Same here on the weekly stochastic. On both of them though, money's still coming out. Closed over the 25-day. Volume more than what we've had all week, but still not hitting its average volume over this amount of time. But like half under the 25-day, half over. Healthcare. Look at that. Wow. That's the kind of candles that are fun to trade. If you can do some day trading, and you're gonna love that stuff. So it's still green up here. Basically got this engulfing candle. They engulfed these past two bars here, right? Opened below the 25-day moving average and rallied all the way up here, tested that 50-day moving average and closed down just a little bit below it. But look at that volume, all that action with the volume being low. So that's why there's a couple different camps of thought when it comes to volume, because people will see stuff like this and say, look, it was low volume, and that might be true. So how much importance to put on volume, I don't have a clear answer on that, but regardless, because I don't have the clear answer, I'm always watching it, right? I'm always paying attention to it. Imagine you're in a cockpit of an airplane. You got all these different indicators. If there's an indicator telling you something, you're probably going to pay attention to it. Is there any indicator you're going to ignore? Probably not. So, all right. So, what does that mean? Does that mean that we could see even more strength to the upside if the volume increases? That's what I would think. And we got money flowing in. And overall, in sort of a big picture, I've been hearing for over months now. It was like literally months ago where it was new news to me. I can't remember exactly when, but the big picture, I get for like maybe mutual funds, pension funds, things like that. Money's kind of flowing out of these growth stocks and going into more like value stocks. So I think the healthcare sector is really getting lit up over this, and probably because of all this health concerns that started a couple years ago, and whatnot. So for this one, if we keep seeing bars like that, we're going to be up here testing the 200-day moving average, which would be wonderful. It would be wonderful to test the 200-day moving average to see what's going to happen. Financial sector. All right, financial sector looks kind of like technology and the S&P. We got a crossover here. We got a good amount of buying come in, met that average, the daily average, opened below that 25-day, closed significantly above it. Probably going to be testing this 50-day moving average, assuming we get some good earnings reports, and we probably will. And so that's looking good. Consumer discretionary. Well, look at that. Increase in the volume. All right, closing above, barely above, but maybe it's going to stay in this range right here. Probably going to be testing that 25-day moving average. But even though our weekly stochastic is starting to tighten up, has not crossed over yet, money's still flowing out on the big picture. Look at that huge amount spike in the volume. They really try to push that at the end. Industrials opened above the 25-day. Look at that. That's probably going to be testing up here. It's been basically using the 25-day as support lately. Again, this, even though we don't have enough money flowing in on that side to look at that. See how that turned yellow? Now there is enough money flowing in here that it's not enough to be green, but it's enough to change from red. So it's kind of like the way that this chart is designed is for long-term shorting and long. So if someone was short in here, this turns yellow, letting you know. It's kind of the warning. That's warning to slow down on your position because it potentially could be turning green. So money's starting to cease, not flowing out as much, potentially starting to flow more in, and which would make sense because this is a lot of the times these industrials, these are not, they're kind of considered more like defensive plays. They're not like the high-flying growth stocks that a lot of times don't have earnings. It's usually more like industrials like steel, copper, stuff like that, concrete. IWM. Ooh, there, man. That's a banging volume. But look at all that banging volume, and we didn't really have the bang out of a move right there. But it was still a powerful move. Also, we got the same thing going on here now. For the last 3 days of trading, money is slowing down on flowing out, and if it slows down enough, we start seeing money flow in. It's going to be turning green. And okay, above that 25-day moving average. Qs. Similar story here, right? That's why a lot of times, like, I've said this before, but I have no idea if you watch this before or even watch the whole thing. If you just have like this basket of well-diversified stocks, you are not diversified. Look at all these different stocks we've been looking at. The S&P 500, stocks that make up the S&P 500, but different sectors. And look at how similar they all look, right? It's basically, it's inaccurate. At the minimum, it is inaccurate to say that if you own a well-diversified portfolio of stocks, then you're diversified. You are still 100% vulnerable to systemic risk, system risk on the whole system of the stock market. To something as catastrophic as an EMP attack, to something less catastrophic, to something like a stock market crash, to just overall whatever the overall market's doing. If you really want to be diversified, you have like a certain amount of your money in equities and a certain amount of your money in something else, like some non-correlated asset, like whatever asset you want to pick. I know the ones that I like. You can like whatever ones you like. It's an individual preference, right? So that's what the Qs are doing. Dollar. All right, dollar. Is that Friday? No. All right, look, it's slow unloading. Dollar. Boom. Dropping right there. Light up that volume candle's not there yet. Stochastic still going sideways up here above that 80 line. We'll see. Is it going to bounce back up? Could even come down here and test the 50-day. But for the last year, you see what it's been doing. Just been going up. So, but it probably won't go up forever. But is next week going to be the time when it changes that? I'm guessing no, but could be. Bonds continue to go down. So usually what's happening, right, when these bonds are going down, then the stock market tends to go down too. So some of the mixed, signal indicators we have, right? So the MMRI, okay, it's really in this wavering, in this extreme risk. Yet even though it's wavering in this extreme risk, we see the VIX loading really slow. We see the VIX coming down a little bit today. And we see that treasury rates coming down just a little bit. We know we got these earnings going on, and we got the bonds continuing to go down. So the prediction for the S&P 500 as of October 21, 2022 is that the S&P 500 is going to 1 million. Just kidding. I'm pulling that Bitcoin propaganda stuff on you. The S&P 500 prediction is, I think we potentially could see this testing up here. Ending the last couple days throughout the week, I was thinking, it's too much downward movement. But I think with the earnings announcements coming in next week, and from what I understand, after a company announces, like they put the banks first, and then now the tech companies are coming in, and then now that those earnings announcements are done, the companies can start buying back their stock. Buying back their stock can have more than one effect, but one thing that it can do is drive the price up, right? Buying, it's everything's supply and demand. When there's a lot of demand, the price needs to go up to balance out the supply. So a lot of buying can help push up the market. Oh, and the one I forgot to talk about, midterm elections. So, all this stuff can kind of be orchestrated by what your good buddy Ronald Reagan set up back in 1988, the Working Group on Financial Markets. It's the President's Working Group on Financial Markets, known as the Plunge Protection Team. And so it was originally meant to kind of maintain market stability, which me personally, as being kind of a neutral trader investor, like, I don't really care about that. Like, I'm not a 401k IRA type investor where I just need everything to go up. Like, hey, if a company's garbage and it deserves to be priced like garbage, price it like garbage. And if it still pays a good dividend, buy it. But so our society right now is set up that everybody needs everything going to the upside. Maybe not needs, prefers, strongly prefers. Maybe sometimes they need it during midterm elections. So that's another thing that might be helping to goose this. So I think it's possible we're going to see testing this, which would be great. We want to see this being tested. We want to see it being tested to either fail or go forward. That's really it. If it doesn't fail, then we know that we're probably going to start building a base going sideways and then start moving up. And that will give us an indication that this bear market is over. However, if it comes up here and it tests this and it does like this and it fails, then and after it fails, how quickly is it dropping? That'll tell us if, like, what inning we are in of this bear market, which has been about 10 months now. Right here's a year, 1 year. This is the year 2021. Right here is the year 2022. Now, oh, excuse me. How's it? Yeah, 2020. This must be 2020. I don't know. What the heck? Where's? Oh, okay. It's not a full year. Here's looking at a full year. All right, now we're looking at full years. So 2021 and 2022. So, it's almost been getting close to a full year that we've been in this bear market. Now you see this one, look at how that dropped down really quick, but it was in the beginning of 2020 and it started rallying back up. So the majority of the year that the market was in a bull market here. Same thing here, a little drop down, kind of build a base. But look at over here, right? Start dropping down here, kind of towards the end of 2000, drop down for a full year here in 2021, continue to go down through did I say 2021? Pardon me, 2001, and continue to go down through 2002. And then at the beginning of 2003, start going back into a bull market. So maybe we could potentially get another year of this. We will see. Things are definitely on shaky ground. The old school way of looking at stocks was like these fundamental analysis, like, hey, this company's going to open up this and that. And, there's certain companies like, I don't know, I'm guessing like Dairy Queen. If World War III broke out right here on U.S. soil, is everybody going to be running down to Dairy Queen? Probably not, but so Dairy Queen, if I don't even know if Dairy Queen's publicly traded, but if that's a stock that was publicly traded, that's probably not going to do that well. Would yoga mats be doing really well? So whatever that is, Lululemon, if that's yoga stuff, would that be doing really, really well if a World War III broke out on United States soil? Probably not. But would Raytheon do well? Probably. So, it kind of depends what sector it's in. There's a variety of things. But like to say, a rising tide raises all ships, and lowering tide, lowers all ships. So that is the prediction for the S&P 500, the overall market for 10/21/2022 at 7:09. Disclaimer: this prediction is subject to change anytime I feel like it, and I don't have to tell anybody. So let's look at oil. Oil, look at that. Whoa, it's just like a cross right there. Look at this. We got this one, this upside down hammer type of thing. And this one is right side up, but look at that. Boom, barely there. Traded really low. So usually when you see this long thing to the downside, it's a bullish sign. But this is also, when you see this like doji looking thing, that's kind of like, it can be indecision. It could be resting, could be reversal. It's basically kind of digesting what is going on. And again, oil prices if oil prices are low, that's better for midterm elections. And again, you got the president's working group on the financial markets in there orchestrating things to the benefit of whoever the president is at the current time. Like, they all do it, right? Since 1998, they're all doing it, no matter which side of the aisle they sit on. So, but we're looking kind of like that. We got a little support going right here, and look, it seems to be kind of making this going this way and slowly, right? How would that be like this? Give me something here. We got this line forming here, and you can see this is going up here. So I think that might want to make, it's going to break either way, but I think when it's pushing up like this, it's pushing to break to the upside. But we got the 50-day moving average giving that some resistance, and we got a 20-day moving average, which is weaker than a 50-day, giving us some support here. And we do have, what else do we have here? We got, in a way, we got a low, and then we got a higher low, a high, higher high, and I guess it depends on what time frame, because here we got a low, we got a high, lower high, lower high. So it kind of depends on what time frame we're looking at, and right now we're looking at a 3-month chart. So maybe 3 months isn't necessarily the best thing. I think we're getting kind of compact though, right here. Kind of broke down to the downside. We seem to be in this range though of, let's see, look at that, right? Sort of, you can see even going back here, like kind of, it was in a higher range up here. You can see all that just like congestion right in there. But we're in here in this sort of price congestion area, and looks like right in there. Yeah, it was higher. So, you know, I don't know, I'm thinking I think fundamentally oil wants to go up, and I think plunge protection team, I think politically oil's going down. And those political forces, they're powerful. So right now, honestly, I've been placing options trades, shorting oil with options this week. After my last options trade closed, I was it before I did that? I don't know. I've got a couple accounts, and sometimes I can't remember what the timeline on some of them. Some of them are like long term, some of them are just short term. But yeah, I've been selling some call options up here, and just kind of taking, you know, 20, 50 bucks, close it out real quick. Because why 20, 50 bucks? Well, because taking 20, 50 bucks, 70 bucks, one trade was for 70, that's better than zero. And the other thing is that when you buy a stock, let's say, where's a stock that we have right here? Let's say you buy the stock right here, 19. Let's say you buy it for 19 bucks. If it goes down to 18, say you only have $19 in your account. That's all you have, and you buy it for 19. If it goes down to 18, the broker does not require you to put more money into your account just so you can keep your stock position open. That's not how it works. You just have to have enough money to buy that stock one time. That's buying, right? Buying it. Now, if you're shorting the stock, maybe a little bit different. But the way that the futures margin works, if you were to buy this stock at 19 and you only had $19 in your accounts, and if the stock used the same sort of margin as futures, then when it dropped down to 18, your broker is going to be knocking on your door, probably email you, saying, hey, you need to put more money in your account to keep this position open. So when the futures position goes against you, you have to have enough money sitting on the side to maintain that position, to keep it open. And if you don't, then they'll probably just close you out, and they don't care about whatever your plan was. They don't care if you're losing. They have to do things to protect their risk, and you are basically counterparty risk to your broker. So you're doing whatever you're doing, and if you do silly stuff, it might not be silly in your eyes, but in their big picture, if it's silly to them, they might close you out. So for me, and being that like today, I don't know how many hours I worked at my job, but I like didn't even look at the market. Like I was just busy working. So I'm okay with opening a position in the morning and setting up a limit order to buy to close the position, and do it at like 50 bucks. And sometimes like throughout the day, maybe like on lunch, I'll check it and see what's going on. And normally I'm trying to do it so no matter when I check it, it's either closed or it's right around in there. If it goes against me by 10 or 20 bucks, I'm okay with that. But I try to, when I try to do that. Sometimes when I have the day off, when I'll just day trade it, and then it's a different story because I'm sitting here right there staring at the computer, you know, watching things go. So it depends on what I'm doing in the day. But that's why I love futures, because once you kind of understand the margin, you can make some quick money, but at the same time, you're making this quick money and you're potentially risking quick losses too. Could be significant losses. So one time I think I lost like $17,000 in a relatively short amount of time trading futures. So yeah, you can lose a lot of money pretty quickly. And what happened with GOLD? GOLD. What happened over there? Let's look at 3 months. Boop. GOLD seems to be building this base right here. All right, but we got this, seems to be some resistance. Like, you know, back in the day, I was a gold bug. I still am a gold bug, but I don't look at it the same way now. I love gold. It's one reason why we're looking at it. But this futures price of gold, I don't really care if it goes up or down, to be honest with you. I do care. I want it to go down. I want it to go as close to zero as possible. And I'm hoping I can, you know, buy a lot of physical gold at a really steep discount. Nonetheless, it's still up here at the moment. So, but as far as trading in a trading account, I like some mining stocks, and there's going to be a link in the description to this video below. There's a mining stock. They mainly mine silver. They're known as a silver mining stock, but I think they got some gold stuff going on too. But so I'll trade gold mining stocks, and whether they're royalty or streaming stocks, or I usually like the actual either royalty stocks or the mining stocks. For some reason, I've never really got too much into the ETFs and stuff, just because some of them give some decent dividends. And if you just want to find out more, like the royalty business model is a really good one to look into. So look into that, see if that's something that you might like for kind of for whatever you might like it for. But as far as like kind of daily trading, unless you want to like trade more like actively trading, where you could do something like UUP. You're watching UUP, or you're basically going to be watching more than one thing, but you're looking at something that's going to represent the dollar, if you want to use UUP or whatever you want to use. And then you're going to look at something that that represents gold. So let's look at this ETF. And you'll notice, just generally speaking, it's not 100% of the time, but generally speaking, when the dollar is going up, gold is going down. So if the dollar is going up like it's been going up, you know, you could somehow be taking short positions on gold stocks. And if this dollar starts dropping, then you could take long positions on gold stocks. And but keep in mind that to the political class, it's kind of politically better to have the dollar up and gold down. So, you know, if you want to be trading, well, it depends what you want to do. But what I found to be somewhat effective, if you want to just buy gold mining stocks and sit and wait for gold to shoot up through the moon, you could do that. Or you could, you know, learn how to trade to the short side. It doesn't necessarily mean you have to short the stock. You can do it through buying put options. You can do it through selling call options, naked, or credit spreads. What else could you do? There's probably some other. Maybe there's some inverse ETFs for the gold sector or something like that. But that is something that you could do. Or you could straight up trade futures and see how much money you could lose in such a short amount of time. Not just kidding. I'm sure you'd become a billionaire in 2 minutes. So that's not financial advice. I have no financial qualifications to be telling you that, and I barely have any financial qualifications to be telling you that Bitcoin has been going sideways. you know, but that's not financial advice either. It's just looking at these red and green things here, and they look pretty sideways to me. With that, paper trade. All this stuff is great. Everything I'm telling you is great, and it's sort of a lot of theoretical stuff in a way. So test these things out. I keep showing you, like, hey, when supposedly when bonds go down, stocks do this, and you got this indicator over here, and you got this one here, and this and that, and do not take this as absolute. Test it, because I personally really don't think any of this stuff is absolute. You know what's absolute? This number right here. That's absolute. And then tomorrow it's going to be changing. Not tomorrow, because tomorrow's Saturday. But for Bitcoin, you know what's 100% absolute? That this is the price of Bitcoin right now. And at whatever, you know, whenever it starts trading, that's the real thing. Everything else is kind of speculation. You know, these are indicators. These are not guarantees. So they're just giving you indications, and you have to figure out how to put things together in a way that works for you in order to achieve an outcome that you like. I think of it a lot of like swimming. At some point, you got to get into the water, and you got to, like, you heard about the doggy paddle, you heard about the breaststroke, and you heard about whatever, the float on your back and the treading water. And at some time, you got to get into a pool and you got to test it out. And then at some point, maybe you go into a wave pool. So you test it out with more of a simulation. And then maybe some point you go into the ocean. And then at some point you go into some waves or something like that. I think you get what I mean. Like, you learn these certain things, and then the water is moving. When you're in like a river or the ocean, a lake, or depends on what kind of lake, but when you're in certain bodies of water, sometimes they're calm, sometimes they're not. And you have these different techniques of swimming, and you match up the right technique with the right sort of what the water's doing and what your goal is. Hey, if your goal is to get to shore, you're not gonna you don't want to just tread water. You want to swim. If you need to get to the shore as fast as possible, maybe you're gonna do the breaststroke. I don't know. If you kind of want to, you know, you're swimming next to your friend, and you guys are talking about these wonderful videos that Brent is making and how great they are, then you're probably going to do the doggy paddle and, you know, float over there slow. So depending on what your goals are, what environment you're in, how that environment's moving, you know, all these different things. The point is, paper trade, put these things to test to see what will work for you given your unique life situation. Because even though I've never met you before, you have a unique life situation. You might live on Oahu just like me, and you might have a job. So we have similar unique situations, but they're not absolutely the same. I don't have kids. I'm not married. So I can pretty much do whatever I want whenever I want. Maybe you live on Oahu, and you have a job, and you have kids, and you're married. So you've got different type of things you need to be accountable for. So whatever your life situation is, you got to figure out a way that's going to work for you. So consider paper trading, and hey, don't just start and stop there. Go to iofsuccess.com. Download some stuff, my friend. I'm gonna hook you up, you hook me up, you know what I'm saying? So every day the market's open, and Sunday when it's not, I send you something. Hopefully it's always useful. Sometimes it's quick, sometimes it's a little more. And one thing that I can tell you is I am working diligently on something, trying to come up with something that's going to be of some good value for you. So you download some stuff, you're going to be one of the first people to get access to it. And whatever it is. Actually, I have a couple different things, but I'm not working on all of them at one time. Like, seeing like, what should I do? Try this, try that. And eventually I'll get all of them done. But what's going to be the first one? Not sure. I think one of the first things that I might be doing is looking at putting together a program to that's all through paper trading that can get someone from from theory to practical implementation in a very, very short amount of time. However, it's got to be done in a way where it's 2 years down the road, however I record it and package it still needs to be relevant, right? I don't want to make something that's only relevant for whatever 6 months or something like that. So that's what's going on, and thanks for listening, because none of my friends or family, no one else wants to hear this, and maybe you don't either. I'm just talking to myself. You guys have a fantastic night. Bye-bye.